Hey everyone, welcome to the weekly review. And we have a yield blow up combined with stocks going down, VIX up 15%. And this is not just the Moody's downgrade, it's also the response to it. Bessent said over the weekend that he's not concerned about the Moody's downgrade. He said that we might reinstate various levels of Liberation Day tariffs to various countries, and countries will get the letter with their respective tariff level. He also restated Trump's point about Walmart not raising prices due to tariffs, and it's all bullshit. Like, it would be very easy to calm the market down, but they are refusing to do that because it's basically the Trump playbook. Never acknowledge the problem, always go on the attack. If something goes wrong, it's someone else's problem always, or someone else's fault always. So it's very difficult for me to believe we will get a reversal in rhetoric. Even if they try to appease it, it will be a very awkward, stupid way of doing it. Without actually acknowledging the problem, and until they acknowledge the problem and actually show concern about the yield blow up, I don't think the market will calm down and they will get more and more punished until they finally capitulate because they have no choice. This being said, uh, I, I, I there are levels and levels, and the three levels that we have to look at are Liberation Day level, which is also the yearly AVWAP, then one band, basically one standard deviation from that yearly AVWAP, which is around 530. And if that doesn't hold, we go all the way to 500. I don't think we will get to this level. Uh, it's either here or here, but more likely this level here, so 530. We also had on Thursday or Friday Michigan consumer sentiment, and we were nearly at all-time lows, one of the lowest prints in the last like 50 years. Uh, and the combination of stocks at near all-time highs and consumer sentiment near all-time lows is not a good one for stocks. But if we pull back, consumer sentiment can go a bit lower, but the combination of consumer sentiment at all-time lows and stocks in a drawdown is very bullish. Because we can all basically only go higher from here. It depends what concessions are made by the Trump administration, obviously, but I would be quite confident in buying somewhere around here, or obviously if we go to 500, it's a slam dunk buy for a move higher later. But for now, there's room to go higher for yields. Uh, Unfortunately, it's a breakout, so we might get a retest of the highs we got in the 20-year and 30-year at the 2022-2023 levels. But yeah, unpleasant. It is what it is. That's kind of my take. And it's all self-made. Like, the problem here, or not the problem, the sad thing here is that it's all self-made. It could be easily reverted with a bit of a tone change, but they refuse to do it and not acknowledging the problem. The market will never respect an administration that does not acknowledge the problem. There's the saying that markets stop panicking when politicians start panicking. So until we see the Trump administration start panicking about this and reversing course, don't expect the move down to stop. Obviously, the path it takes to go down can be a bit complicated. Like, I drew a very simplistic path, but I think we go here, then we can have a bounce, but that bounce can go both ways. It's a very uncertain period, and it's difficult for me to give a very good path. Expectation for now is that we will continue going down, regardless of short-term bounces, until we hit this 530 area. In my opinion, this is the main target, but it could be here, it could be here. It depends when they capitulate and how they capitulate. Um, yeah, but that's kind of it for now. I don't have a lot to tell you this week because uh, it's relatively straightforward. So until next time, have a good one. Bye bye.